Overall, we've had emerging markets moving up the rankings. Yesterday, BAT, another company out there, just highlighting how important exposure in developing and emerging markets is right now, cushioning somewhat of a lackluster performance out of developing markets. So to what extent is Africa moving up the ranks as well?
I think Africa is, sort of go back about a month or so when Heineken put out some of their results, and you've seen they're doing very well in Africa. And, not only doing very well in Africa, but also targeting what is sort of more the upper market in Africa, because people have more money in the pocket and they're spending and they want these aspirational brands. So Africa, frontier markets, emerging markets is where the growth is at the moment.
While the opportunity is there, we've got to take cognizance of the risk though, and yes. More so than an emerging market, there's a risk associated with African markets because across the board they're considered frontier markets.
They are, and there is risk, but I also like to differentiate and to sort of look at the rest of the world in terms of risk as well, because as investors we tend to sort of sometimes think that the developed markets are without risk at all. Okay, if you look at a lot of developed markets at a country level, a lot of them are hugely indebted, whereas you come down to the African level, most of the countries are not hugely indebted and actually have very little debt and actually have the money that's available to put into infrastructure, grow their economies and grow their businesses. Obviously there are risks associated with Africa. I'm not saying that it's a completely riskless investment, but there's also opportunities because with certainly less competition in Africa, you're also seeing higher margins for many of the companies that are operating in Africa. So I think that any risks that you see are well taken care of by the returns that you can make in Africa.
Well, what about opportunity from a valuation perspective? And I know that we're using very broad stroke
yes.
terms here. You cannot group all the African countries under one umbrella. But generally speaking, what are you making of valuations that we're putting on the table?
I think it's very attractive. Sort of in December I was saying that it's very, very risky to be uninvested in any emerging or frontier markets at that point in time, okay, because the markets had gone down by so much last year that the risk of being uninvested was just huge. Now we have seen that come back in terms of emerging markets and move up, but we haven't yet really seen that happen in terms of Africa and in terms of the frontier markets, where people have been a little bit more reticent to invest, because as sort of risk comes back on the table, it tends to flow into what people don't consider more risky asset classes, one class at a time as such. So we haven't yet seen that money flow into Africa. But when I said in December that we needed to be invested because the risk was high, I think we're sitting in that position now with Africa at the moment. We can't say exactly when it will go up, but we've had countries that have done well, we have companies that have done well, and we haven't had share prices that have done well. So that's a tension that has to change at some stage.
So let's hone in on territories that, of course, being read on your radar screen. Nigeria is one of them. There's concern centered around the kind of unrest and violence that we're seeing specifically in the northern territories right now. From an investor's perspective, how are you viewing all that's unfolding
yes.
in that territory?
I mean, that is something that we have to be very cognizant of, and we think that in terms of that, the risk has increased in Nigeria. We still think that our risk is very well compensated by the return, and we also see that the companies are not really being affected by it, because most development is in the southern states, so most of the companies' operations are in the southern states and relatively little is in the northern states. But it is something we must be aware of, and something that we ourselves are busy going through a process of trying to understand why it is and who possibly are the sort of sponsors of this violence. People point fingers very quickly at the northern governors. It's maybe more in the south, where some of the southerners maybe would be happy to see some violence in the north and be happy to talk about a secession, because remember, the north can never ever talk about a secession because they don't have the money. The money's in the south.
Are these conversations being had? Because it's quite interesting, these are conversations that weren't being had a while ago, and it's interesting how the investor community is now looking to understand that environment more so.
Yes, it is. Obviously, sort of as new information comes to the table all the time in terms of investments, we always understand things sort of more deeply. We're always looking at, that's our job, and our job is a forward-looking job, and a forward-looking job is obviously a much more difficult job than a backward-looking job. But there is more information, we look at it more, but we also look at Nigeria as a whole and say there's tremendous opportunities in the north if we can just see some more development come in the north. A lot of the agricultural land that we could see being very productive is in the north. So in some ways, the best way to deal, I think, with the problem for what's happening in Nigeria is to put investment in. If you put investment in, it will solve a lot of the problems. You need to create wealthy people, and you won't have all these problems.
For now, though, your investment strategy pertaining to Nigeria very much centered around the south, because that's where the major business activity is.
That's where the major business activity is, yes.
Okay, well, let's look at a few companies. I mean, the last time you were here, we put banks, Nigerian banks in the spotlight, and those that, of course, stood out, you know, the big three specifically. First Bank has been a favorite, UBA as well. Less spoken about is a company called Food Concepts. Run us through what exactly that company is about, because one can only imagine that it faces some competition with KFC, just having launched major operations in that country.
It does, and KFC, funny enough, is about to launch in Ghana as well, where Food Concepts also has some operations, But we actually like Food Concepts. One of our guys was meeting with the management there last week when he was in Nigeria, and they plan to list in about 4 years' time, so it's on sort of the unlisted market at the moment, but you can invest in it if you sort of take an unlisted stake, in about 4 years' time, they plan to have over 300 outlets, and that of their Chicken Republic outlets, which compete with the KFC. But also, being a local company, they can sort of manage things a little bit different, and they have a broader and maybe better understanding of the market. So KFC comes in and puts their offering on the table, and there's room for KFC. We're not saying KFC is not going to have room for it, but you know, people initially go to KFC because it's unique, and then eventually the market settles, and you find that people also take the local offering, because the local offering may be a little bit more attuned to what the locals want. I mean, you look many years ago when McDonald's came into South Africa, everyone said, well, Steers is going to be finished, and at the end of the day, by the competition that has been created, you have a bigger market, a more vibrant market, and both of them make a lot of money. But
so it's a company that you've got your eye on, and hoping that that IPO is going to come to fruition sooner rather than later.
We do, because you know, our job is not only investing in companies that are already listed or looking at them, but looking at the other companies as well. And also, of course, by understanding Food Concepts. We also understand a little bit more about another one of our companies in our portfolio called Zambeef, for instance. Zambeef's in Zambia, but they're busy expanding into Nigeria. They run the butcheries in the Shoprite stores, and there's a lot of exciting things happening there. So, you know, investment is all integrated. It's not a company standing on its own.
And it's that same kind of principle that translates over to country exposure as well. We've got a lot of these African markets providing exciting growth opportunities, but not having an investment vehicle like a stock exchange that investors can get exposure to.
Yes, it is. I mean, for instance, like the DRC. Now, we've been talking to some people, and we want to go over a look at the DRC. We're not going to be able to buy directly in the DRC, but you know, some of the banks are growing fast. We're also seeing some nice consumer stocks in terms of rolling out supermarkets in the DRC. And then if we're saying, well, how do we access that? Well, you know, a company like Shoprite is busy moving up north, and they're looking at the DRC. Plus, of course, you know, I mentioned they have operations in Nigeria. And then on top of that, you have companies that are listed in London, for instance, like Lonro Africa, which is hotels, water bottles, flights, which is all integrating Africa, and it's an opportunity for us to get into these countries where there isn't a stock market, but there is business and there are opportunities.
It's interesting that you mention, I mean, you know, that's of course an approach that you've got to take, you know, looking at exposure to these territories via multinationals that operate in them. But Shoprite is a very interesting example, because so much of its business is still in South Africa. So how do you, as you know, someone that sits on an African desk and manage an African fund, actually you know, weigh that up and look at you know, the detail in terms of exposure?
We have really a limit as such. You know, and we said if a company either has more than half their business in the countries that we are interested in, and that business is growing, we're prepared to invest in it, or if it has about 40% of its business in those countries, and we think that within 1 or 2 years it'll have over 50%, so all the growth is really coming from the countries that we have our mandate in, we will invest in that company. So a company like Shoprite is very interesting for us, but at the moment we're watching more than directly investing, because South Africa is still quite big in their lives. But we see, I mean, 800 million people in Africa, only 40 million in South Africa. So the future is north of us in terms of retail demand.
Another company that may just stand out there is a company like MTN as well, a South African company that's made steady progress on the continent, and you know, that African strategy proving to be very successful.
It has been successful. I mean, I remember the days when MTN first invested in Nigeria, and everyone said, well, this is like a terrible operation. But no, they've made very good money in Nigeria, and they've done very well. And for us, MTN is something we can put in our portfolio because they have enough of their business already outside of Africa. So, and it's an evolution as South African companies move further north and find these markets and use these markets. And you know, they make money from the markets, but at the same time they develop markets. You know, when I know we're talking a lot about Shoprite at the moment, but Shoprite, when it goes into a market, it provides a market for large quantities of eggs or milk or bread, which provides opportunities for local entrepreneurs to start a bakery or an egg production or something which previously there was no one for them to sell to. So it also helps build the logistics in the countries and actually develop these countries as well.